All right, team, let's do this. Here is the deal. A lot of things going on in the markets today. Dow Jones was down 1,000 points intraday today and closed up 100. Can you believe that? It's been an interesting day. I'm going to talk about mortgage rates. We're going to look at the real estate market. This has been spurred on mostly, by the way, Derrick Evans here, NMLS 155010. Give you the quick mug shot, then I'll get out of here. You can call, wrong one. You can call, text me. You want to buy, you want to refi, you want to get pre-approved, do that quickly as well. Information's all on the screen, on the channel. And, you know, what kind of prompted this today was just noticing the market action over the weekend and been doing a lot of pre-approvals lately. Buyers are really interested in the market, but they're not really interested in playing this game the sellers have been playing for quite some time now. And talked to a buddy of mine today who is very, very good realtor, plugged in, had a hot new listing this weekend, had tons of traffic in the open house, one offer, 10 grand under ask. That's it. He also told me that with some of the buyers he's working with, he was getting callbacks from some of the listings that they had looked at, some of the showings that they had. Realtors were calling him back saying, hey, what'd you think? So when the listing agents are calling and kind of chasing down the buyers who have come through the property and haven't made an offer, that's probably the most telling thing that you can see. The fact that his open house, I know the exact property. In fact, I was just at the property not that long ago that we were talking about. And it's, you know, it's in Esco. It's a good price point. It doesn't have a great yard, not like a huge yard. Decent lot, but just not like a huge yard the way it's structured. Could be the property. But tons of foot traffic through the open house. Only one offer, 10 grand under list. So what does that mean? Does that mean anything? Does that mean there's a slowdown? What else is going on? What's happening? I mean, how can the Dow be down 1,000 points today and rally all the way back? This increase of volatility, there's definitely something going on here. Well, let's take a look at let's get grounded real quick. We'll look at the data. We'll look at mortgage rates. We'll look at what's going on in the financial markets. Try to put this puzzle together. I've been saying for a while now, the real danger, and I think the only danger to the real estate market is if rates go up too much too quickly, and rates have definitely gone up. And although we've got a little bit of a reprieve the last few business days, you can expect rates to continue to go up. We are still at an absolute lock immediately scenario. This is not the kind of market where you sit around and play around and see if tomorrow is going to bring a better rate. You might get lucky, but 2 out of 3, you're going to miss that. So this is a lock it market. You get in contract, you lock it up. All right. And we're probably going to be that way for quite some time. So let's just take a look here. Let's get grounded. All right. Altos Research, these incredible reports they put together. Market Action Index went to 87 for San Diego, detached from 91 the previous month, which is a decline. Also, inventory has increased. We haven't seen that in a long time. Okay. So, that's also remember the holidays are still sort of formulated into this. But the main thing that we look at here, we can track all these different things. Everything looks fine. The main thing, price per square foot, all right? So if you want something to kind of hang your hat on, price per square foot is the thing that sort of encompasses everything, the whole market fairly. Even though it's not exactly equal for every property, it is a more fair way to assess. And you can see we just sort of got away. Over here in the recent weeks, I mean, just going back to, late October, we really had some separation from the longer term, the 90-day moving average. The shorter term moving average is sort of got separated quite a bit. So there was a lot of frenzy at the end of the year, people going way above and beyond creating new amazing comps. And we had some separation there. And I think we're just seeing a regression back to that mean. I think we're just seeing the market cooling off a little bit. I've had a lot of buyers recently who have said, we're going to make this offer on this house. And if somebody else is going to pay more than that for it, they can have it. Buyers have just gotten to that point. They've figured out what their own top dollar is for a given property. And they're laying that out on the table, and they're okay. They're okay not getting it. And for a long time, we had buyers in situations where they had to get it. And I think that could be what we're seeing as far as just overall a little bit less of a frenzy. Still a lot of activity, a lot of people going to open houses, less offers. You're starting to see, some just a little bit softer environment, which is actually good if you're working with buyers like I am. It's better that way. This craziness is hard for VA offers to compete. It is. So we've got that. Let's take a look at mortgage rates. Now, we have a very classic pattern going on here. I alluded to this recently. At some point, we were going to see this. Here's a perfect continuation situation. So we have this previous support right here, right? We were supported on this. Remember, we got those couple of days there. We're just like, okay, fine. And then we had this big FU day and then this big FU day. This was the one that was going through my head in the last video. Okay, well, we've got a little reprieve since then. We have a little uptrend going on, but here's the thing. This particular support that we had right here bottomed out right here. And that support has now become resistance, and we just got rejected on that. And so this is very typical in a downtrend to go down, okay, make some short-term support, go back down, retrace up to that previous support, and then continue the leg down. And that is kind of what I'm expecting to see. A lot of people think that, well, the Federal Reserve is raising rates. That is deflationary. Deflation should be good for bonds. Why are bonds getting smoked? 2 reasons. Number one, the Federal Reserve raising rates is confirmation that inflation is so rampant, they actually need to get in. It's like you don't call the firefighters unless there's a fire. Well, they have now said we are sending fire trucks. That's what the Fed raising rates means. Now, you would have thought, oh, well, lowering rates, that was them sending the fire trucks. It's the same thing. It's just opposite sides of the same coin. It's the same problem, just the different side of it, the inverse of it. So we've got that kind of situation going on with the Federal Reserve, even though it's deflationary that they're going and raising rates, chalking us up at 7% inflation for bonds that pay under 3%. It's just guaranteed money loss. It's just a guaranteed loss of money. And here's the current downtrend that we're in. And you could say that this may have even held today, and that could be part of it as well. So not looking good. You know, the charts are not good. We should be locking loans immediately. You get a refi in, lock it immediately. This is for all the LOs that watch my channel. Lock it right away. If you get a purchase contract in, lock it right away. I mean, before you order the appraisal, before you do anything else, get everything in that you need and lock it. And trust me on that, because there's going to be some bad days coming. And today just kind of proved that. If you look at what happened today, look at this. Stocks mount stunning comeback on Monday with Dow closing in the green after earlier 1,000-point loss. The Dow was down 1,000 points today. And the plunger protection team came in and saved the day and turned everything green. I mean, it was ugly. Now, if you remember the last stock market crash we had, there was lots of days like this. Lots of volatility where there would be huge swings intraday. But look at the calming numbers. If you didn't pay attention to the intraday action, if you just looked at, you know, the tape here at the end of the day, you go, oh, pretty mild day. A little volatility. Volatility was up, but pretty mild day. Up 0.3 in the Dow, 0.3 in the S&P, 0.6 in the NASDAQ. Ho-hum, right? Meanwhile, crypto has been murdered. We're going to talk about that a little bit more here in a second, but crypto has been murdered recently. And just the way they're sort of propagating that is very interesting to me. And I'm going to tell you what my 2 cents is on that. I still believe that you're going to see assets rotate out of stocks and into crypto assets, but that's definitely not happening right now. And the big problem is when you have fear and ultimately what is a risk-off scenario. So let me explain to you what's going on right now with this. The scenario that we're in is what's called a risk-off scenario. So if you are a big hedge fund manager, if you are a big fund manager, if you are a big market maker, whether you're running your own money or not, doesn't matter. Right now, the risk-off button is getting pushed. And that means that you get out of things like tech stocks and high-flying, situations like that. You get out of crypto, which the problem with crypto is that there is no real method for valuation. You can't explain to anyone why Ethereum is a better value than XRP or Litecoin. There is no metric like with stocks where we have the price to earnings multiple. You could say, oh, well, Facebook's only 22 times earnings and the S&P is at 40 times earnings. So Facebook is a great deal in comparison to the S&P. We don't have that with crypto. So if you talk about panic cascading very quickly, that's the reason why there's so much ups and downs, because literally there's no way to even say, no, it's definitely a good buy at that number based on what we know. A lot of these projects don't even have revenue. It's very, very early. It very much reminds me of the .com bubble. It really does. It reminds me of that. so much because there were so many things going on and everything sounded good. But most of those companies went out of business. Most of those companies didn't make money. Most of them just didn't get off the ground. And so I think that may happen with some of these crypto projects, why I'm a big proponent of Bitcoin. Bitcoin is not going anywhere. And we're going to take a look at Bitcoin as well here in a minute. But so what is this volatility? How does this play in to what's going on with real estate? Well, we look at the activity. So we give you some inside information. I'm going to do a poll this week as well with some realtors that I know well and see what everybody is saying. We need breathers. Breathers are okay. There is definitely no reason to panic about real estate. Could there be a slowdown coming is the question. Could it get slow? Could we see prices come in? Could we see sellers start chasing down buyers, which is kind of some of the information that we've been receiving and what some of the sentiment might be out there. Buyers seem to be over it. Could that all be happening? It could. Rising rates, watching your stocks and your crypto assets get murdered, but a lot of these buyers have crypto assets. They do. A lot of them do. A lot of them do. And people don't realize that. And it may be just a secret little stash of 10 or 20 grand, but a lot of people have crypto assets. So if you're down big, you have there's two ways to go about it, two ways to look at it. If you're a pleb, let's say, you're going to look at it like, okay, I need to liquidate. I need to get my money out of there. I was a stupid idea. Why did I do that? I'm such an idiot. Never do it again. You liquidate and you sell at the bottom and you get what you deserve. Or someone who goes, you know what? I believe in this so much. I'm going to take this cash I was going to buy a house with and I'm going to double down. I made a post today about how's everyone enjoying the managed crash, which is what this is. This is a managed crash. The Federal Reserve is crashing the financial markets team. That is what's happening. Make no mistake about it. That is exactly what's happening. It is a managed crash. They're trying to do it very softly. They're trying to lay us down nice and easy in the bed of nails. That is what's going on. And there's no other way to describe it. That's exactly what it is. So if rates are going up and people are going to see their assets decreasing, which you didn't today, it's kind of saved today, saved everything. But if you start to see that, and you start to see that trend, high volatility, whoa, it was up that much today, whoa, it was down that much today, whoa. That uncertainty could change the sentiment a little bit. It could. And that could also contribute. But the reality is, the main story is inventory, and inventory is not coming from anywhere. However, what have I been saying for months about when would inventory come? Inventory is the chicken and the egg that we've been waiting to see. Who's going to move? Who's going to blink first? We need prices to stabilize and maybe even go down a little bit, month over month or quarter over quarter. Either one. Month over month would definitely do it. If we saw prices drop month over month, a bunch of sellers who've been waiting around would finally capitulate. They would finally say, okay, I think we've hit the top. We probably need to sell now. We could see some more inventory flux in. If we did, and it was right in the midst of lots of chaos in the stock market, lots of chaos in the crypto market, and interest rates going up, yeah, that could slow real estate down. So how low can it go? Well, I like to just be totally realistic and reasonable. Why won't that go away? I'm trying to get out of here. So let's go back. When was COVID? Right here. We were at 475. Let's call it 475. 475 a foot. In February, let's get closer to COVID. Let's call it 500. Early March, $500 a foot. That's a nice round number. To today, 650. So we're at 500. Now we're at 650. That's 30% higher. I think that is your absolute worst case scenario. That's a big worst case scenario, but I think that's our absolute worst case scenario. It's 30% in the market. 30% decline in the real estate market would be enormous. So is it somewhat loosely fitted? Yeah, it's a little bit loosely fitted. But that said, we don't have the inventory yet. The inventory I'm talking about is theoretical. In theory, If we get to that point, we'll see more sellers. And if buyers have decided to exit the building when all of the sellers come into the marketplace, then that could cause a problem. It could cause a problem. But that's a lot of things having to go just right in order for things to be bad for real estate. I mean, a lot of things have to go exactly a certain way. And the only reason we're talking about it is because some of those things are starting to go that way. It's the only reason we're talking about it. It's so absurd to bring this up if that weren't the case. It'd just be an absurd talking point. But because some of these things are happening, we got to talk about it. Okay, let's get to some stories here. What's up, Robert? A lot of money waiting on the sideline, hoping to buy real estate. Residential downside is limited. Yeah, I agree. I think especially in San Diego, there is a lot of money on the sidelines. And I think there is a lot of, especially in San Diego, there's a lot of investor money. And I'm very bullish on it. But I'm just showing you, this is just the truth. These are just the things I'm seeing. These are the things that, I forgot to add that to the broadcast, my bad. These are the things that I'm seeing. These are the things that I'm expecting. And these are the things I'm tracking just to find out, like, what do we have something to be worried about here? You know, is there a potential problem on the horizon? Jim Chanos, this is a good one. He's so right. Jim Chanos says the notion that the Fed will always bail out the stock market is dangerous. Very much so. Could not have said it better myself. Everyone is saying this. Well, if the market tanks too hard, the Fed will jump back in. Are you sure? How do you know? That means you believe everything they're saying. You believe that inflation is really at 7%. It's not. I bet it's triple that. But it's easily 21%, maybe 25%. So the problem that they're dealing with is actually much bigger than what they're telling you, so they can't just flip back. They're going to have to stay the course. And he's right. The stock market slide is unlikely to budge the Fed from tightening. These are two stories that are the same day, 10 minutes apart. So, two of the better reporters. They're both worth reading for their own reasons. But I think you should check those out if you're interested in why that's the case. Lawmakers call on House leaders to swiftly ban members trading stock in office. I do agree with this, but it's one of those things. It's like almost you want to pick your poison. You want the way that they're cheating the system and the way that they're being corrupt. It's kind of nice to have that above board. It's like prohibition. You outlaw it, well, then they're just going to go do something dirty that you can't see. And who knows what that would be? Not that they may already be doing it. Who knows? But I'm for this, and I think it's something everyone should get behind. Call your local representatives and tell them you're behind that. Here's a couple things. I always look for this because a lot of these articles, even though they are written and presented as though they're editorial, a lot of them are advertorial. And a lot of them on Bitcoin particularly. And whenever you start to see negative sentiment coming from these, usually that means whales want to buy. In fact, I'll show you a great follow on Twitter if you want to check out whale activity. Bitcoin inches into positive territory after falling below 33,000 to a new low. What are you talking about? A new low? What? We've been lower than 33,000 in the last couple of months. A new low? And that just kind of, when I see things like that, it makes me go, what is up with that? Trying to read between the lines. Here's another one. This one's on the pro side for CNBC. Bitcoin bounces after brief dip below 33,000, but analysts still expect deeper losses. Imagine trading and making investment decisions based off of the headlines on CNBC. Imagine. You would get so smoked. They're almost exactly wrong so much that I see this as sort of like a trick. So I saw this come out, and this has been, what was this, 11:30 when this came out? So it's been 5 hours. And what has Bitcoin done since then? Just popped higher. I think it's up $3,000 since they published that story. So when I see those things, it makes me think that some whale is trying to buy. And they throw out some negative FUD. They try to, pump some bad info out there about how dangerous it is and to get people out. And then they come in and buy. And that's kind of what it looked like. I could be wrong, but that's what I see. That's what I've noticed. Remember Lloyd Blankfein? He's the ex-Goldman CEO. He's like, crypto's happening despite plunge in digital assets. He's like, yeah, it's happening. He said, look, my view of it is evolving. I can't predict the future, but I think it's a big thing to be able to predict the present, like what is happening. And I look at the crypto, and it is happening. Basically, like the whole ecosystem of the crypto space it's happening. Just like the internet was happening in the late 90s, crypto is happening now. It's going to take a while for it to all get figured out. You know, there's going to be ups and downs. There's going to be tough times here and there, but it's definitely happening. And then this is the only chart you need to see if you want to really know what's going on with Bitcoin. And we drew these lines last week, and I'll show you how we drew them. This is just the channel of Bitcoin. And by the way, if you haven't looked at a Bitcoin chart in a while, this right here, that is the crash, the COVID crash. That right there. Oh my gosh. Computers annoy me so often. How is it that I'm faster than the computer on so many things, and yet that makes no sense? So that was the crash. That was the COVID crash for crypto. Bitcoin goes from 10,000 to 3,000 or whatever it was. Huge crash within just a few weeks. Look at where we are now. I mean, my goodness. So a lot of people, if you've been into like Bitcoin Twitter, they're saying this is the M for McDonald's. Everyone's going to have to go work at McDonald's. One of the cool things about the Bitcoin community is that everyone is so self-deprecating, and like even the president of El Salvador tweeted a picture of himself with the McDonald's hat on. Like that to me is just great. You're talking about people who should be in a bad mood. If you've ever talked to traders, if you've ever known traders, whenever they're down, they're in terrible moods. Not Bitcoin hodlers. They're just like, well, I just have to go work at McDonald's. I mean, that's awesome. So here's what we did. Because these two tops were very well defined, right? We knew where those were. So I just took and I drew a line, I drew a ray from the top to top here, and then I copied it to see if there was a channel happening. So I copied it, and then I brought it down here, and we had these two bottoms in at that time. And those were the only thing that really fit perfectly for this channel. And so I just set it right here, and look what happened. We came down, and these are on the weekly chart. This is Bitcoin weekly candles. We came down and we touched that today. Just touched it and whoosh, came right up from it. So when you look at the turnaround that we had last time we were in this vicinity, right here, we spent a lot of time sort of consolidating and sort of dipping lower and getting into this. But the uptrend held. And that's basically what this is. This is a channel. It's a humongous channel, but it's a channel nonetheless. And we are on the bottom range of that channel. So if you were bullish on Bitcoin long term, you would be buying it in this range. Even though it may go sideways, it may go a little bit lower right at 386 right now. It may go sideways, it may go lower and still stay in this channel and then eventually pop back up. But if we break below this channel right here, it's bad news. It's really bad news. So a lot of people have been talking about, we're going to go hit 30,000 again. Well, if we go down to 30,000 again, while that could also be a floor of support, it would sort of nullify this uptrend, this channel, which is very beautiful and something that would be great if we could keep intact. You could still make an argument for a double bottom taking place with this old support over here, and maybe that's there, and that's why we're seeing these wicks on the bottom side. But that is really what we're looking at. This is the most important chart for Bitcoin. It's really the only one you need to see. Is that going to hold up? Will it hold up? And only time will tell. So good luck to those of us who hodl. Good luck to those of us who have money invested in the markets. And let's say a prayer for the Federal Reserve. They haven't, by the way, raised rates yet. Now, I know the market is always anticipating the future, but we haven't seen a rate get raised yet, and they're supposed to do it multiple times this year. So everyone prepare. I know I broke a record here. I've been saying this for months. Prepare. Be smart with your money. Don't make any outlandish purchases right here. Be smart. Save up a little bit. Be safe. Be safe. The whole community of whales has just gone risk off. So make note of that and adjust accordingly. All right. Want to buy, want to refi, give me a call, text, shoot me an email. Happy to help. That's what I'm here for. Hopefully this information is helpful to you. Hopefully we can all win here. But let's just be honest with ourselves about what's going on. We got to be honest with ourselves about what's going on. So important, especially if we're going to educate others about it. That is the mortgage bond chart. That is what's going on. Mortgage bonds are getting killed. Rates are going up. That trend is going to continue. Mark my words. In a year or two, people will, maybe we'll get a refi boom, and people will refi back into the threes. Their rates that were in the fours, the fives, or whatever. That may happen. We may look back on these days, these rates we're at right now, where you have conforming VA and FHAs in the high twos. You go to high balance and you get to 3. With conventional loans, you're in the mid threes, mid to high threes. So, that's what's going on. And there's nothing you can really do about it. That's what it is. So we need to be honest with ourselves. We need to educate people. This is also, for my professional friends out there, this is not the time to go hounding your leads, your prospects, and let's double down call. Instead of calling everybody once a week, let's call them twice a week. Don't do that. Come up with a way to educate them about what's going on in the market. Be the person who's actually telling them the truth and being forthright with it and saying, hey, look, here's what's going on. Rates are going up. Talk to them about it. Provide some content to them along those lines. That's the smartest thing to do right now, because, people want to work with someone that they trust. And if you're telling someone bad news, by the way, that's one of the best tells if someone is telling you the truth, or if it's someone you can trust. If they're willing to tell you uncomfortable news, if they're willing to tell you news that may even work against what it is that they promote or what it is that they sell. That's credibility 101. So if we have some news that isn't great for real estate values, who's it good for? It's good for real estate buyers. Hey, yeah, rates might be going up, but look what's going on over here. We have less offers that we're competing against. We have opportunities to actually get into homes where they haven't even received an offer after the open house is over asking. Like, that's an opportunity for buyers. The good buyer's agents will go and scoop up properties for their clients in this market. They will go out there and they will take that opportunity and they will kick the crap out of it. And, kudos to them. This is going to happen. It is happening. So, it's who you work with does matter, and it's time to get after it. So let's be honest with ourselves. Let's be smart with our money right here. Okay. If you're an investor and you've got cash on the sidelines, you are licking your chops. You are just loving it. And I'm happy for you. Listen, I'm in the same boat, but I'm not deploying much cash here. To be honest with you, I'm not. I have it there to deploy. Right now, I'm using Gemini Earn. If you haven't seen that video, you get 8% APY Gemini Earn. Get paid interest every day. It's a beautiful thing. And I'm loving that right now. I'm loving that position right now. I'm not loving the fact that my Bitcoin and crypto assets are getting destroyed, and it looks bad. Like, the chart does not look good. It looks bad. It looks like it's going to get worse. So hopefully I'm wrong about that. But what we've seen is that Bitcoin has actually been tracking pretty closely with the NASDAQ, which scares me because I think the NASDAQ is due to get slammed. But we'll see. We'll see. Hope I'm right. All right, guys. Have a great day, and I will see you soon.